Most people don't know this company exists, but it owns parts of the world you live in: the buildings, the offices, the warehouses, the homes people rent, the infrastructure behind everyday life, not always directly, not always visibly, but structurally, and that's where the real power is. Because power is not about what you see, it's about what everything else depends on. Most people think power today belongs to technology, Apple, Google, Amazon, but those companies operate on top of something. Physical infrastructure, real estate, logistics, space, and someone owns that layer. That company is Blackstone. Blackstone is one of the largest alternative asset managers in the world, managing hundreds of billions of dollars. Capital from pension funds, from sovereign wealth funds, from institutions, from governments. This is not just private money, this is global capital, retirement funds, national reserves, public wealth, all flowing into one system. And that system is designed to acquire assets at scale. Now here's the key difference. Most companies grow by producing more. Blackstone grows by owning more. And ownership is a different kind of power. Because ownership doesn't depend on constant innovation. It depends on control, real estate, hotels, office towers, rental housing, logistics networks, data centers. These are not trends, these are foundations. And whoever controls the foundations controls the environment. Now here's where the strategy becomes clear. Blackstone doesn't just buy assets, it buys timing, it waits. It waits for moments when markets break, when others are forced to sell, when liquidity disappears, when fear dominates decision-making, and then it moves. 2008, global financial crisis, housing collapses, banks fail, markets freeze, most investors panic. Blackstone expands. It acquires distressed assets at scale, at discounted prices, entire portfolios, entire buildings, entire systems, not because it predicted the crisis, but because it was prepared for it. This is a pattern, because in every crisis, there are two types of players: those who are forced to sell, and those who are ready to buy, and the ones who are ready to buy define the next cycle. Blackstone is built for that moment. It operates with long-term capital, which means it doesn't need to react. It can wait. And waiting is a form of power, because time eliminates competition. Now layer in leverage. Blackstone doesn't just use capital, it uses debt, but not in a reckless way, in a controlled way. Debt allows it to acquire more, control more, scale faster, and when assets generate stable cash flow, that debt becomes a tool, not a risk. This is how systems compound. Capital, debt, acquisition, cash flow, repeat. Now add another layer: fees. Blackstone earns money not just from ownership, but from management. Which means it profits even when using other people's capital. This creates a feedback loop. More capital, more assets, more fees, more acquisitions. The system grows itself. Now consider scale. Blackstone has been involved in some of the largest real estate transactions in history. Logistics warehouses, distribution centers, rental housing, office towers, assets that define how modern economies function. This is not coincidence, because modern power is not just digital, it is physical, and physical infrastructure in now add geography. Blackstone operates globally: United States, Europe, Asia. It moves capital across borders, across markets, across cycles. If one market weakens, it exits. If another strengthens, it enters. This creates flexibility, and flexibility creates advantage, because most participants are trapped in one market. Blackstone is not. Now layer in something deeper: control without visibility. Blackstone does not need its name on buildings. It operates through funds, through structures, through layers of ownership, which means most people don't even know who owns the assets around them. And invisible control is harder to challenge, because you cannot react to what you cannot see. Now think about housing. If large institutions acquire significant housing portfolios, they influence supply. If they influence supply, they influence prices. If they influence prices, they influence how people live. This is not direct control, it is structural influence, and structural influence is more durable. Now zoom out. Blackstone is not just investing, it is positioning itself at the center of value, where cash flows are generated, where assets are concentrated, where systems intersect. This is a different level of strategy. Because it doesn't depend on one industry, it depends on the structure of the economy itself. And that structure changes slowly, which makes it predictable. Now here's the deeper insight. Blackstone doesn't disrupt systems, it absorbs them. And absorption is one of the most powerful forms of control. Because over time, what gets absorbed becomes part of the system, and the system becomes harder to escape. This is how power compounds, not through speed, but through accumulation. And accumulation is invisible in the short term, but dominant in the long term. Now think about the future. If companies like this continue acquiring assets during every cycle, then over time, control becomes concentrated. Not in governments, not in visible corporations, but in capital structures. And once control is concentrated, influence follows. This is not theory. This is how modern power works. Not through visibility, not through attention, but through ownership. Ownership of the things everything depends on. The buildings, the infrastructure, the systems, the foundations of daily life. So the next time you think about power, don't just look at innovation, don't just look at technology, look at ownership, look at who controls the assets beneath the system, because that's where real power exists, and most people never even notice it. Now the real question is, when the next crisis hits, who will be forced to sell, and who will be ready to buy everything again?